We thank you for joining us this hour as we try to get you to the weekend on a Friday afternoon now in New York. Jim Frischling is here for the hour. Jim is the president at New Oak Capital, and Dunstan Pryal of FoxBusiness.com is also here. As we said, let me go around the room here real quick. And Jim Frischling, I want to allow you here in the studio to weigh in on this as well. I mean, I'm sure you'll be watching your BlackBerry over the weekend to see if anything happens, whether it's what Brian is reporting or something else, what needs to be done here. A lot of people said Jean-Claude Trichet, ECB president, should have stepped up yesterday and did not.
Well, I think that's right. It sounds like if these rumors are true about the ECB getting involved today or about to open up the facility. I think that's a great move. I think the market is basically telling the government that it's not enough. The bailout package that's been proposed is not going to satisfy the situation in Greece, and I think they're also potentially saying it's not going to satisfy the situation rolling into Spain, Italy,
well, that's the thing, the contagion effect. Nick, what's your take? Maybe time for a quick point or question there, Jim, if you want.
I would just say I thought it was a really good report this morning, and with strong corporate earnings, the expectation that interest rates will remain low, I think you're going to continue to see.
Your takeaway is that low rates are still here to stay in the United States.
But low rates here to stay and strong earnings, and you're going to see companies continue to add jobs.
The juxtaposition of what we talked about earlier is that the U.S. is the safe haven in all this. We're better than the rest of them. Fair?
I absolutely think that is fair.
All right, guys, we're going to move on here because we have to get to...
For your insight.
Well, that's true, because if you blink, you literally missed it. It happened in such a short amount of time. Stay there, Nicole. I want to bring Phil Flynn in from the Chicago trading pits on all this. You're probably listening to what Teddy's saying about the, the volatility of the markets. What have you been thinking about in that trading floor the last couple of days?
Well, boy, I'll tell you, I think I've seen more news than Teddy has seen. I don't think the Greece news is old news. I think it's evolving news. And I do think it's one of the reasons we've seen the volatility down here today. But, really, when you talk about the so-called fat finger trade, I feel like I'm back in Catholic school, because it's the great mystery now. Nobody seems to know where this trade came from, and that is really the big story. I mean, we've got exchanges pointing fingers back and forth, and we're talking to the guys here on the floor, and, they were trying to point the finger at the CME group, and they're saying, hey, guys, we can't even take an order that big on our system, so it's definitely not us. You've got the NASDAQ going after the NYSE, pointing fingers in each other. And the bottom line is it could turn out that this wasn't a mistake at all. We do not know yet. And that's the key thing that is really the talk down here on the floor. Where did this trade occur? Who did?
What about that
idea?
The CFTC
just came out. Yeah,
what about that idea? What do you think, Jim, about that idea that it's not a mistake? Is that, is that something that you're thinking about or hearing about? What's the talk and the chatter over in your trading floor?
There is a lot of chatter, and that is certainly, there is a theory that it wasn't an error. And to Teddy's point, with all respect, yesterday might have been child's play, but a lot of money changed hands, and I don't think we should understate how much, in fact, changed hands. They might be erasing the erroneous trades at 60% outliers, but that's a 6 times, from my equity friends, I understand, what would have been called an erroneous trade. 10% would have been the precedent, or was the precedent, until yesterday. So 286 trades. 286 trades are going to get erased, which means all the other trades are holding. So yes, the 9% drop to a 3% down close may seem like, okay, not a big deal, but if you think about the range of trading, a lot of money moved hands yesterday.
Can I add a bit of perspective? I just wanted to add, this reminds me a bit, and I'm not trying to make light of what happened yesterday, but it's a bit like a plane crash. A plane crashes and 200 or 300 people die, and we focus specifically on that. Meanwhile, there are hundreds, thousands of planes landing, taking off successfully all around the world. Yesterday, we had a glitch, but all day long, every day, there are tens of millions of trades being made on these electronic platforms successfully. Yesterday we had a glitch. It was a very volatile day.
It was.
Most of the time they work very successfully.
While we wait to figure out that's a good point. While we wait, Nicole, to figure out what happened yesterday, but even today's been a little nutty in that we were down 270 some odd points, I think, at one point, and we came all the way back. We were positive just a few minutes ago. Now we're down 70 something. So there's still a lot of volatility there.
We've had over a 330-point swing here today, Connell, and watching the volatility index, which now is, again, tacking on to yesterday at new highs, again, for one-year highs. And it was interesting, as I walked to the floor before the bell, I walked from booth to booth and say, how's it looking, just to get a feel of this open. I had Jeffrey Frankel saying, nope, look, it's looking good, nothing freaky here. But what's interesting is that some of the traders here are noting the volatility. You just had Ted Weisberg do it. Traders saying today's not really a normal day. We're really swinging back and forth. Many times we don't even move 100 points. So we certainly have that.
What do you think, Phil? I mean, in terms of someone watching right now that's looking at you at a trading floor, doesn't understand all the screaming and yelling behind you, and like the rest of us, has no idea what happened yesterday, and is just worried right now on a Friday afternoon about their 401k plan. What do you tell them?
I say watch Fox Business and turn off your computer and not to worry. The small investor should not worry about what happened yesterday because they have to look at the big picture. Mistakes happen every day. Everybody is standing next to me has an error account in this pit. If this was indeed an error, you can't outlaw human error. But the question is whether it was not. Now, we just had the CFTC come out today to remind, they issued a warning to the market. Anybody that should not exceed speculative trading limits even during the day, not just at the close. I don't think that they're pointing fingers, but I think that they're trying to get their handle around what's happened. What's amazing to me, here we are, how many hours after this incident, and we don't have a clear answer as to what happened.
We have no idea what happened. Here, real quick,
can we agree
incredible
that yesterday it was an anomaly? I mean, the volatility we can expect. We've got Greece, we've got all this breaking news that's scaring everyone, but yesterday was an anomaly.
But even if you throw it out, it's still skittish today. I mean, people are still kind of on edge. How do you think we'll finish today? Phil, how do you think we'll finish? Real quick, and then I'll ask you, Jim.
Okay.
I think we could come back. There was a lot of. I think the Apple news actually shook up the market when there was that Nokia lawsuit. That really pushed us down. But I think we're going to come back.
You think so? You think we'll finish strong? Apple was sued earlier today. We found out. What do you think, Jim?
I'd like to bring this trading day crawl to a close and digest all of that, all what just transpired the last couple of days. Digest Greece, digest the ECB, and actually try to get an answer on what did happen yesterday.
So that's a trader's way of saying I don't want to be long going into the weekend. I'm going to park my stuff in safety, U.S. Treasuries, whatever the case may be.
I certainly like that move more than trying to go long stocks into the finish this week, into what's finished today.
Good enough. Phil and Nicole, thanks to you. We're going to move on now. Dunstan, you don't have like a donut related best guess here.
No, I'm going to return to those crazy things, the markets. Cooler heads will prevail. We are, it may happen later today, it may happen next week, but my belief is that we're coming off the best earnings quarter in 2 years. We're coming off the best jobs number in 4 years.
Right.
As I said earlier in the show, really nothing that's happening in Greece is new. We knew that there was a disaster there. We knew there would be protests. I think people panicked. They're still panicking a little bit, but I think we're going to return to some common sense next week.
What do you say, Jim?
I think correlation in this market and just how integrated these markets are continues to be underestimated and undervalued. So the problems with Greece are quickly extending to the Eurozone, and it can extend beyond that unless Europe, the EU gets behind this. They have the fiscal capacity to get behind it and get it under control. I don't know if they have the weekend. And they may do so this weekend. I just don't know if they have the political, strength to rally behind it. But I think they will. There's my
thinking and a best guess was that Europe may take action this weekend. But my question is it too little, too late? In other words, is the problem already so big that it may spread even if they take action on liquidity or something else? Guys, thanks a lot for the hour. Appreciate it. Good to see you, Jim, as always. And Dunstan, Jerry Willis, and